So the largest Chinese company by market capitalization has recently just concluded their financial year 2023. In this video, we will attempt to break down their most recent earnings and to really understand from both a business, qualitative and quantitative side, how are they performing? And it's probably crucial for prospective or even existing shareholders to listen in. With that, let's get right into it. So before we look into the numbers on how they reported, I've essentially extracted how the price action of Tencent holdings have performed over the last 2 years. And this is the Hong Kong ticker 00700. So as you can see, they are essentially range bounded on the lower end of the range at right around $260 and at the upper bound of this range, which is right around $400. Albeit not very uniformly, there is a lower bound and an upper bound. And you can kind of ignore this huge breakdown because there was some sort of a freak incident back in, I think, October or November of 2022 when there was this elections and the narrative or the story that they were running back then was that China lost its way. So I think right now, even entering or just judging from the price action itself, Tencent is indeed trading at the lower bound of that range. So of course, this whole chart reading or price action reading is not substantiated by anything. I'm just sharing with you my opinion. So with that out of the way, looking at all the technical analysis and stuff, let's get right into the meat of this entire discussion. So this is a very quick overview or the breakdown in terms of the revenue contribution of Tencent as a business. And the second line would be the gross profit on a non-IFRS basis. For our US audience, it's basically something similar like non-GAAP, but they don't follow the GAAP principles. The international standards has its own standards. So I think generally you can see that top line is growing healthily at 7% year on year. However, when we break down into the individual business verticals, you can see that some are actually performing much better than the others. So just looking at this, I can of course read out the number and tell you that, oh, they grew year on year, but you can't really have a fuller picture or context into how Tencent as a business has been performing. So I've essentially taken the liberty to compile the last 4 years of the different business verticals. This is just top line, so we'll go to the bottom line later on to basically give you a more complete picture and a better appreciation. You can see that 2022 was not a very good year for Tencent. There was more red columns than green. And for those color-coded sections, they are essentially year-on-year growth rates. To save you the time to do some mental computing. And in 2022, at least in the second, third and fourth quarter, you can see that most of its business verticals are essentially just experiencing negative year-on-year growth rate. You can attribute this to the crackdown, you can attribute this to the economic slowdown, you can attribute this to government policies. Whatever it is, that is behind us. And you can kind of extract the same point of view that back in 2022, that was also when the share price essentially tanked by a very large percentage. You can see I think back then Tencent was already trading over $700 a share. Before going to 2022, it was right around 400, and at the end of 2022, at the tail end, it was trading right nearer to 200. So it was down another 50%. So that was also when Tencent was showing very, very bad results and essentially not going anywhere. Pretty similar to what Baba was experiencing around 1 to 2 years ago, one and a half years ago. So Webull has managed to outdo themselves again. Open an account and provide an initial funding of more than $500. You get 5 free shares worth between $10 to $500 each. On top of that, complete 5 buy trades. Each need to be worth above $100 for US stocks and ETFs, and there are no limits for options within the first 30 days, and you get 30 trading vouchers worth $450. And if you take part in the Moneybull campaign and fulfill the minimum criteria, those are rewards worth at least $80 of Nvidia shares. So for those with a larger capital base and can achieve the highest tier, that's $5,000 worth of rewards waiting up for grabs. For existing users, you are not forgotten. So new and existing users can now participate in the Transfer-in campaign to potentially enjoy $3,000 worth of Nvidia shares. And on top of that, up to $150 worth of Transfer-in subsidies. So all else said, on top of just sign-up rewards and campaigns, Webull's in-house platform feature is nothing to sneeze at. Their in-house features has helped streamline my investment process. So in Webull's app, you can click into the company section and it will provide you with an overview of the company's past financials, key indicators that you can play around with, and even peer comparisons amongst their competitors. So these numbers and rankings allow me to make the split decision on whether I should look into that particular company further, and thus it has saved me a lot of time. So solid app experience, crazy sign-up rewards. What more can I ask for? So all the details to their campaigns will be in the link down below. Thank you Webull for sponsoring this video. So when you look at total revenue, you can see a pretty similar trend for many of these Chinese tech companies. Pre-2021, everybody was growing monstrously. They are posing 20, 30, 40% growth rate easily, top line. And after moving into 2022, you can see that there's a significant slowdown. Some might be flat quarters and some are even negative quarters. And right now, after they have concluded the financial year of 2023, you can see that there's some sort of revival in growth rates, which is fairly exciting for those of you who actually held through. Because your fundamental or underlying thesis is that many of these Chinese companies, the headwinds that they're experiencing are probably temporary. And as long as the Chinese government and the economy by and large can move out of this phase. Now, moving on to the next line item, which is VAS. So VAS, for those of you who don't follow, it's actually value-added services. So in this line item, there are two core pillars. One is the social network. The second one is their gaming arm, which is both domestic and international games. So specifically for this, I think this is really the laggard of the business vertical of Tencent today. The most latest quarter, they actually continue to experience a negative year-on-year. Despite 2022, Q4, they are already on a much lower base because they shrank. So it was a 2-year in a row shrinkage. Gaming, which is online games plus international games, and also social network. So when you look at the domestic games and international games, I've purposely highlighted in grey for you to follow. Following my cursor, if you look at domestic games, so in Q4 of 2022, they were actually down negative 6% year on year. And riding on that negative momentum, 2023 Q4, they are down another negative 3%. On the flip side, for the international business, most of the time they are in a positive year-on-year growth rate other than Q2 of 2022. So I guess this is in a way the crackdown or essentially the gaming restrictions that were imposed by the regulators and authorities that are essentially taking into effect, and we are seeing it in the numbers. But I think contrary to popular belief, we still remember back then, the Chinese government essentially banned a lot of the youths from playing games. They restricted their gaming hours to 3 hours per week. And more importantly, they have recently just, I think a few months back, just released some sort of a draft, and they wanted to curb this kind of impulse buying. I think the draft regulation has not been enforced yet. So this is just generally the domestic games, and it's contributing meaningfully to the entire revenue contribution of Tencent today. In the most latest quarter, it's 27 billion out of 155 billion. So if you take a quick math, 30 out of 150, that's around 20%. So yes, around 18 to 20% of Tencent's revenue today is contributed by the domestic gaming arm. Now, if you were to move over to the international gaming arm, even though it's green, it's up 1% year on year, but you can see that they are not very promising, because if you were to compare it to past numbers, they are all growing in the teens, in the 10-20% range. So we will explore further on some of the disclosures on why the gaming arm hasn't been performing as well. Now, moving on to social network, I think social network is also experiencing some sort of a slowdown. So if we actually cover up the value-added services portion and just focus on the other two key business verticals, both online advertising and fintech has produced significant improvement in terms of results and recovery. And you can see the online advert back in 2022 was really a disaster. They were down negative 18, negative 17, negative 12.7%. And that was essentially the foreshadowing of the weakness in the Chinese economy. And they've bounced back pretty significantly, between 15 to even 34% over the last 1 year or so. So online advert, I think there's a lot for them to show and a lot for them to catch up in the coming few quarters ahead. So moving on to fintech, I think pre-2022, fintech was also experiencing this monstrous growth, but the overall atmosphere in 2022 was pretty bad in China, and 2023 they are slowly gaining their footing and they are coming back again. So I think for both business verticals, they are showing promising growth rates. So if you were to consolidate our observations, revenue essentially swung back to the positive from a weak 2022, which shows very promising signs of recovery. But online games are still facing immense pressure, surprisingly even international. So Tencent is also rebounding very quickly for the ads vertical, and it's very optimistic for investors, and fintech is also gaining its own momentum. So prospects for individual segments look mixed, because value-added services makes up right around 45% of the entire revenue contribution, while online advertisements and fintech is looking promising. So you can see that one half of the business is dragging down the growth, while while the other half is rebounding very quickly. Now, moving on to the bottom line, I think we can see very, very solid improvements. Tencent has a habit of trying to compare gross margins, which is fair because if you were to compare it to their real bottom line, which is net income, they tend to write up and write down their investments as well, which might taint and tilt the figures to a very weird extent. So if you look at overall gross margins, they have recovered to nearly 48%. So for online advertising and fintech, over the last 3 years or so, they have also recovered significantly. And even for fintech, they're actually boosting their margins by quite a large extent. And this is probably exciting for people that are betting big on their fintech arm. So on a different perspective, if you look at it from a free cash flow point of view, the capex is actually up 33% year on year for the full year, but free cash flow is actually up 89% year on year. I think this is not very representative because they really came from a very low base, and last year the numbers were exceptionally low. They did engage in multiple rounds of cost cutting. There was no one-off fines and stuff like that. That's why their free cash flow growth grew by such a large extent. And right now, the fair value of their shareholding in their investee company, basically their portfolio of companies, they have a fair value of 78 billion and a carrying book value of 48 billion, which basically implies that they have more than 50-60% unrealized gain on their investment portfolio. So if you go and look at the opening remarks of Ma Huateng, which is the CEO of Tencent, and I quote, "In 2023, we achieved breakthroughs in a number of products and services. As video accounts' total user time spent more than doubled. Enhancements to our advertising AI model significantly improved our targeting performance. And international contribution to our games revenue reached a record 30%. So these developments drove high-quality revenue streams, which fueled our gross profit growth of 23% and supported our plan to step up capital returns to shareholders." I think these sort of opening remarks are pretty important because it basically tells you where the CEO or where the executive team wants you to focus your attention at. So I just did a very quick bullet point form to tell you what he wants you to know. So video accounts, they're basically telling you that it's very sticky, adoption and distribution is quick. So for those of you who are wondering, video accounts is basically Tencent's answer to Douyin, which is TikTok, which is short form video. So they are just flexing their muscle, pretty much like YouTube with shorts and Instagram with reels. They have a huge distribution network. So the second point is their AI model improvement, which resulted in greater return on investment on their ads targeting, which kind of also explains why there is this huge uproar in the revenue growth, because they are able to satisfy the needs of their customers, in this case the merchants. Now for gaming revenue, the international contribution, Ma Huateng said that it reached a record 30%. Personally, I think this is slightly disingenuous because it reached 30% because the overall revenue for the gaming segment is actually down. So if you were to actually take a look on the online game portion in Q4 of 2022, it came in around 41.8 billion RMB. So last quarter, it came in at 40.9 billion RMB. And because of this reduction, and also because the domestic gaming revenue actually went down again from a negative 6% base, that's why the international base, despite just holding it there, they took up 30%. You don't have to really read much into it. This 30% is just a vanity number. Now, moving on to the bottom line, I think gross profit profile is improving. They are stepping up their capital returns to shareholder. And two sub-points that I didn't include here, which are also in the opening remarks, they are developing their model, which is jumping on this AI trend, particularly in terms of developing your own in-house large language model and using and leveraging AI capabilities. And the second sub-pointer is they raised a record 3.8 billion RMB in public donations. I'm not too sure who is supposed to listen to these two sub-pointers, but probably for those special interest group. If you understand where I'm coming from, you will understand what I'm talking about. Now, I think in terms of the positives of Tencent's recent earnings, so the revenue structure is slowly taking shape and recovering. So prospects of both the ads and fintech, which is 50% of the business, is healthy, and they're also showing signs of operating leverage because their operating profit growth actually exceeded the gross profit growth. So the gross profit profile is also in the right direction as shared in one of the presentation slides. And of course, more importantly, some of the important metrics that investors tend to track when you are a social media or advertising company: daily active users, ARPU, average revenue per user, and time spent on the Weixin's copy of Douyin is flexing their strength in distribution and loyalty. So this is a very important step forward because It basically tells people that, hey, the economic mode of Tencent is still right there. WeChat is the primary driver and the core essence of the entire business itself, and they're not losing steam, and people are not escaping the platform, or people are not using it lesser just because there's an alternative here. And the other bigger positive of the most recent earnings is in terms of their capital distribution plan. So they are planning for the year 2024 to have a cash dividend of around 3.4 Hong Kong dollars per share, which is up 42% year on year, which sounds very enticing. But if you were to really take a look on totality, on a 290 Hong Kong dollars share price, we have to benchmark it. Let's fix it at $290 per share. I think that amounts to around 2.7 trillion Hong Kong dollars in market cap. That's only a 1.17% yield. So Tencent didn't have a good history of just giving out cash dividend distribution. But that said, they did give out special dividends over the last 2 years, which kind of contributed to that 4-5% dividend yield that some investors have been enjoying over the last 2 years. So on top of the cash dividends, they are also doing a share repurchase program of around 100 billion Hong Kong dollars. So at the same valuation, $290 Hong Kong per share, that's around a 3.6% buyback. So you can see if you add them both up, that will probably return you around a 4.7% yield. So that's very close or very similar to the strategy of Alibaba, which basically acts like some sort of a bond instrument or bond-like instrument that gives you 4.5% yield, 4.7% yield. That is very competitive compared to the 10-year treasury yield that the US is offering. But I think for Tencent, there's something more special or more peculiar, is that there might be a special dividend that is coming again. Who knows? So in 2022, they gave out JD.com shares. Back then, I was not a Tencent shareholder yet. So in 2023, they gave out Meituan shares. And I was a shareholder and I got some odd lot of existing Meituan shares, but that's besides the point. So for context, I think the 2023 special dividend, which they've given out, which is the Meituan share, is the entire proposed distribution for 2024. So this two, which is cash dividend and share repurchase, it's roughly around 16.9 billion US dollars in terms of the value of the dividend. So in this case, last year, their special dividends is 16.9 billion. So this year, can we look forward to another special dividend? I don't know. But if there really is something that is of the quantum that is similar to Meituan, it means that you are probably getting a yield of 4.7% times 2, because they basically match the entire dividend distribution or capital distribution for that matter. The yield in terms of the distribution is closer to 9 to 9.5%. So that's just some appreciation of how Tencent is taking care of their shareholders at the current stage of their life cycle. I think if you were to watch through and pay close attention throughout the presentation, you will probably expect what I were to say. So the value-added services business vertical is not performing as well. So particularly for the social networks, they claim that the music and games-related live streaming services actually went on a decline. So that was the primary driver of the slowdown in growth. So Weixin, which is WeChat, still has a very strong core audience. Monthly active user is up 2% year on year with 1.34 billion people on their platform. QQ, which is the sister app and the first app that came out before Weixin, their monthly active user continue to go on a decline at a negative 3% year-on-year growth rate at 554 million right now. So they did disclose that despite major hits increasing from 6 in 2022 to 8 individual hits in 2023, the domestic games, particularly for the one of the flagship games, which is Peacekeeper Elite, they couldn't monetize it. That's why they basically fired the monetization team. I presume that considering China's competitiveness and Tencent's competitiveness, they're able to revive this part of the gaming division. So on the international games side specifically, they did say that Supercell was repositioning some of its games, which might also impacted on why is there this slowdown in growth rates. However, I think the biggest question for most investors' mind, particularly for those that just listen to mainstream media and headlines, there's a very big uncertainty. What's the growth path forward? How do we project out this entire gaming revenue, whether it's domestic or international games? I think for most investors, they're not really concerned about international, but really the domestic gaming pie. How is the entire industry going to be shaken by the regulators? But at least for now, I think all things considered, when you look at the draft regulations, when you look at the clampdowns that was initiated back in 2021, when you look at how they regulate people spending money and not spending time on the platform itself, all things considered, I think these sort of numbers that they are posing, being down 6%, down negative 3% year on year, they're not particularly devastating, but of course, we can't ascribe you a decent multiple if there's a lot of uncertainty ahead. So just some concluding thoughts. There's probably much lesser disdain when you compare Tencent's earnings to Alibaba because Tencent is still producing reasonable results. They're still trying to fire on all cylinders, and a lot of things considered, I think they are performing fairly well. They're still killing it with their WeChat engine, directly entering into Douyin's short-form video space, and the moat is still as strong as ever. So I think the biggest cloud of worry, no pun intended, is their domestic gaming arm, which contributes around 18% of their revenue. And it seems like there are some missteps there, mainly from the monetization effort, and of course, their plan towards working with the regulators with some of these regulations moving ahead. So all this said, they are still holding well, but too little information to make a judgment call. So on the cloud segment, since we kind of mentioned it briefly, so the cloud division actually faded into the background with just two simple mentions in the business report itself, with no quantitative numbers. So they said that the cloud division actually benefited from their large language model, and the cloud also benefited from the restructuring that was done earlier. So there was not much visibility. At least for Alibaba, I do respect them to still put it out there to basically be flamed by investors. But I think for Tencent, they immediately hide everything under the fintech arm. So I think the last part, just a general consensus and a very interesting observation, the playbook of huge Chinese companies today, to lay low, to lay flat, to lay humble. Make sure to put emphasis on the AI, supply chain, higher value or higher quality growth, and read the 5-year plan from the Chinese government, and to engineer confidence back to the capital markets by issuing dividends and to buy back shares, to kind of act as some sort of a floor to the share price itself in case the share price just keeps plummeting and nobody wants to participate in the Chinese market or Chinese capital market anymore. So feel free to leave in the comment section down below on what's your key takeaway from Tencent's most recent earnings report. With that, I'll see you guys in the next video, but more importantly, and hopefully, I'll see you guys on the moon. Goodbye.